How do we build our wealth quickly and safely? That's what we're talking about in this video today. We may want safety because we've been working hard to save up this money and we don't want it to go to zero, of course. And we want to be quick about this because some of us are trying to retire tomorrow. In this video, we're going to examine how we can achieve this perfect portfolio. I'm Afro Senpai. I hope to make everybody feel comfortable and confident with investing on their own by documenting my own wealth building journey. Let's go. So because I'm a math teacher, I had to go with the X and Y axis. Both quick and safe are the most optimal situation, so it's quadrant 1. Slow and risky is the worst case scenario, so it's quadrant 3. We're gonna say the benchmark of the entire market is our origin, VU, because it's the market itself. It's not either quick or slow, and it's not risky, nor is it safe. Now, make sure you stay to the end of the video so you can understand the rationale of why I put things where I put them, so you can't come back to me saying that I lost you a bunch of money. So what moves the quickest within the market? Penny stocks and altcoins can move almost exponentially in percentage increases because their current value is so small. If I have a 2-cent stock or coin and it shoots up to 4 cents, I've made 100% returns on that investment, but that means they're also the riskiest. Next, we move into growth stocks. Growth stocks move up quickly because they typically relate to tech, and they also incur risk because people trade in and out of them so frequently. Tech is everywhere, so money's always being thrown into tech stocks. But again, they are also risky because during bad times, that's the first thing people get rid of because everyone knows they're so volatile. So we'll place penny stocks here and we'll place individual tech stocks here. This is your Tesla, Nvidia, all that stuff. Quadrant 3, the worst case scenario, slow growth and risky, are going to be junk bonds and entrepreneurship. Junk bonds may pay out a higher yield than the bond that is highly rated, but it's called junk for a reason. Quadrant 2, we're going to talk about what's safe and what's slow. Bonds and value stocks are safer because they don't have a lot of volatility. People are buying and holding them, which is why when you're close to retirement or you're in a retirement fund, you'll see a lot of bonds in your portfolio. And because there's not a lot of volatility, that means the return on your investment is going to be slower. Groups of bonds are going to be generally safer than an individual bond like a municipal bond. Bond safety can come down to the rating of the individual bond. If you're buying a bond or a group of bonds like in an ETF, you're going to be able to see the individual rating of that bond before you make that purchase. So bonds are quadrant 2 all day. So now who would be in quadrant 1? If we know that market funds are the origin, we know that it's generally safer than everything else, but it's just not going to grow your money quickly because we're waiting for the market to do its thing. So this is going to be controversial, but the only investments that I feel is quick and safe are real estate, and I'll say Bitcoin only at a certain time period. Somebody who has never looked at particular charts or looked at historical data wouldn't find this safe and looks at the price of it every day and calls it unsafe and completely risky and about to blow up the comments saying I'm such a this and that. So let's break down what I'm saying. I feel Bitcoin is safe only at particular times in its cycle. Bitcoin has a 4-year cycle. I've talked about this in numerous videos before, but right now we're in a safety zone for Bitcoin. To want safety and to want to blow up your money quickly is not reasonable. Now, if you want to be an unreasonable person who hedges on the side of probability, then keep listening. There's a pocket of time every couple years where this strategy of quick and my definition of safety will work because Bitcoin is very volatile. And you may be saying to yourself, how can it be safe and volatile in the same breath? Because governments cannot help themselves and governments will continue to print money. Because they're continuing to print money, Bitcoin's value has to go up. I'm not a professional, but in my eyes, I view that as a safe investment. I know that Bitcoin follows a cycle: 2 years of bull market, 1 year of bear market, 1 year of consolidation, and the cycle repeats itself. To me, that is safe because it's predictable. Within the 2-year time span, I know that I can grow my money more quickly than I will in the market. So that's where the micro strategies comes into play. We'll see how well Mara does this time around. We'll see how well BlackRock's Bitcoin fund does this time around. But before you get angry in the comments, you have to go off of what my definition is. My definition of safety is knowing Bitcoin's cycle, as well as the fact that governments can't help themselves but print more money. That may not be safe to you, and that's okay, because I'm going to sleep tonight not knowing or caring what you think safe is. You have to do what's best for you and your family. This is my opinion. If you have your own opinions, make your own YouTube video. I will say this: always have a backup. Have a market fund as 50% of your portfolio. The other 50% is your own strategy. And then you can look back over the course of the year and say, okay, how did I outperform? What needs to be tweaked? How can I make this better for next year? That way you have the best of both worlds. You have the market doing its thing at the origin, and then you can go after your riskier, quicker returns. Share this with somebody who thinks there is a safe and quick investment out there. Again, I'm telling you, it is not reasonable to have a safe and a quick investment all the time. There are pockets of opportunities here and there, but typically when we involve quickness, we involve riskness. And when we involve safeness, we involve slowness. I think that's it. Let me know what you think in the comments. If you found value in this video and you want more content, feel free to subscribe, pay that like tax, and until the next one, remember to smile because you are beautiful. Peace.